Welcome to this edition of the Coronavirus Freight Market Update. It's April 21st, 2020, and I'm joined here. My name is Kevin Hill, joined here with,
Michael Vincent.
Always, Michael Vincent.
How you doing, Kevin?
I'm doing great. We have an exciting show today. We're going to start it off by the numbers in just a second, and then we're going to shoot over to Andrew Cox, our research analyst here at FreightWaves, to talk about what's on the news and what's on FreightWaves.com right now. And then over to Zach Strickland, our Director of Freight Market Intelligence, who will have some things to say about the freight markets. And I think Craig Fuller, our CEO, will be calling in to debate on finding a floor for freight volumes. And then our head economist.
Yeah, and as always, it's an interactive show, right?
It is an interactive show, yes.
Questions, comments, you're going to want to get ready to shoot those in as Craig and Zach debate. It'll be great. I always enjoy it when they start debating each other or discussing.
Yeah, and then on to the economy. We have a lot of economic numbers hitting the wires right now, and Anthony Smith, our head economist, will be joining us to talk about that. And then we'll talk a little SONAR.
Yeah. And
then Emily Szink, our Executive Vice President of Content here at FreightWaves, will come in and talk about At Home, which will be May 5th, 6th, and 7th. It'll be interactive virtual conference event. So
yeah, absolutely.
And again, this is interactive. We'll get your comments, so please drop us a line.
FreightWaves, LinkedIn, and Facebook.
LinkedIn, Facebook, FreightWaves.com. You can, in LinkedIn is probably the easiest one to send in any questions or comments you have. And
yeah, great. So by
let's
the
kick
numbers.
Off the show. Let's talk about the numbers, the coronavirus numbers.
Yeah. So on Thursday of last week, when we were doing this, we were at 587,815 cases U.S. And now we're at 792,938. Deaths were at 23,654. Unfortunately, now we're at 42,518. When we started this March 17th first show, we were at 6,300 cases, 6,344 cases, and 110 deaths. So we've come a long, grim way, Kevin.
We have. And when we talk about apex or peak, what does the curve kind of look like?
It's interesting.
Right now?
It's interesting because it changes. Yeah, I mean, they've got to keep changing it and updating it with the numbers, obviously. But the peak was like the 12th or 11th or the 10th is somewhere where they were projecting it before 13th, I think it was. But now, looking at it, today's the 21st, and I know what day it is because it's a day after your birthday. So
it is, yes.
That's how I know what day it is. But the peak was actually on so far the peak, and let's pray that it was the peak. Was on the 15th. Was at 2,618 deaths. Was on that day, and the peak was projected to be 2,151 per day. So it was higher than projected, but it was so far the 15th. Now we see a 3-day decline and then a tick up yesterday, but it appears to be flattening, right? And the projection of total deaths is fluttering around 60,000 to 61,000, which would be leveled off really. At about March 10th is where that just flattens, and then it's like it's right around almost 60,000 around March 10th is where the projection is right now. So hopefully we're heading towards flattening and we stay way below that. But if we're at 42,518 now. It's only 18,000 to the 60. So that would indicate that we're getting close to that flattening. So hopefully that's right.
So on Facebook, Steve Sabar and Robbie Meir say hi. Hi right back to you.
Hello.
Yeah. And on LinkedIn, David Rossi from his Client Logistics is cut off here, so I don't see his company name, but it says good morning. And Nicholas as well. Happy Tuesday.
Happy Tuesday
to you.
Happy Tuesday. Hopefully we're hitting the coming down off of this COVID-19 and we can start reopening. I mean, that's the big talk, right?
That is,
Georgia wants to open. Germany's opening. Is it today? Germany's starting to put people back to work today, I think it is. And
I think so. I think it is today. So Paul Zaborowski he's president and COO at PAS Transport. He says hi, or howdy, gentlemen, actually.
Howdy.
Chris Ulrich over at 5K Logistics. Good afternoon, guys. Sport Coat's back again.
Yeah.
They are back again.
It's a new thing.
Definitely.
Started a trend.
Then Kenneth Carter over at, he's the president at American Freight and Logistics, checking in. So good to see all of you turning in for the show. And now let's talk about some headlines with Andrew Cox. And I think we'll start off with a protest down in Houston. Is that right, Andrew?
That's right, Kevin. Some independent truckers staged a good old-fashioned protest on the side of the 610 loop in Houston yesterday. There was about 75 truckers that decided to park their trucks there on the side of the loop, which caused the police there to shut down the freeway for about 3 hours in the middle of afternoon traffic. They were protesting for better wages, for better loads, and they were also pressing a little bit for regulations on brokers. That seemed to be a point of contention there. There's been some tension between brokers and carriers over the last couple of weeks. The tension is now boiling over as brokers are continuously pushing down carrier rates, and carriers don't think that it's fair for them.
Yeah, I read that into there as well, Andrew. Is that it was really when you saw the signs, the pictures of the signs, Kevin, it was very much a backlash against brokers, right?
There is, brokers are the middlemen, and they take a lot of the heat when.
They take the heat when the rates need to be driven down,
exactly.
and the loads are low, and they're trying to maintain their margin. But when things are good and they're spreading the money, then they're good, right?
They're good at that point. But I think they always kind of take the short end of the stick, no matter what market we're in, right?
Yeah. Yeah. I thought it interesting too, Andrew, that they got everybody's driver's license and everything, and they've been cited with Class C misdemeanors.
Right. I mean, this wasn't a protest in which they went and filed for a protest application or anything orderly by any means. It was on the side of the highway. They closed down the interstate for 3 hours in the middle of afternoon traffic. They rightfully deserved a misdemeanor, and now that they've been put on a list, if they were to do this again, they're going to be their trucks are going to be impounded and they're going to be arrested. So the stakes are a little bit higher if they do this again.
Interesting.
So what's our next headline, Michael?
So let's move on to the next one. It's very similar, right? So FMCSA loosens enforcement of drivers. What do you have on that for us, Andrew?
Right, so in a notice posted on Friday, the FMCSA informed the state driver licensing agencies, the SDLAs, that they will not be penalized if they're not able to notify federal government of driver violations, convictions, and disqualifications within the 10 days, which is normally as the law prohibits, or is normally as the law requires. Now they're going to have it 3 months starting June 30th to put in those whether it be a conviction, disqualification, or driver violations. They have to report them to the federal government. But this is leaving a lot of motor carriers up in the air. They're not exactly happy about this because they're afraid they might actually put a driver on the road that is previously been disqualified without knowing it.
Yeah, it's interesting. The first thing that came to my mind was the question, well, isn't safety essential? And the other question that I have, and maybe others do as well, is why loosen this particular standard?
Yeah, the FMCSA has loosened a lot of laws and legislation around getting drivers to make sure that they're able to move from place to place throughout the country. But this one seems to be one that's focused simply on safety. And I'm with you on this, on the dude. I don't understand why they've pulled this legislation or this requirement over others.
Yeah, because when we first saw this, we started seeing some loosening of regulations as far as the laws from transferring from state to state, as far as if you were in school, CDL, and then there was the whole, the CDL driver didn't have to be in the seat next to you while you were training, et cetera. And there was there seemed to be some logic behind it, right? Because we're seeing these tremendous volumes of freight and lack of drivers and that sort of thing. Freight levels are coming down, et cetera. This loosening of this type of thing doesn't seem to make sense to me. I don't understand what the motivation is behind it.
Yeah, I'm with you. We only had a really tight capacity environment there for a couple of weeks when we saw those freight volumes surge 30%. We're now sitting in an environment where we have freight volumes near Labor Day, so there's not a need in the market there for any increased drivers, and there is a need for increased safety. So I'm with you. I don't understand it.
Yeah, it seems like one of those things, where even I would suspect there's a large portion of drivers that don't understand why this is there, right? None of the drivers want unsafe drivers being out there, and they need to have these things checked to see if they are or aren't or should be driving or shouldn't be driving. They're just as conscious about public safety as we are. So, anyways.
Yeah, and we have a couple of viewer comments here. Greg McLean, CEO at Logistics Etc., talking about freight volumes, is saying, don't expect any quick rebound. Many of these locations already have inventory on hand, and keep in mind, not every state is going to be able to reopen at the same time. We may have some sort of slow increase come August or September for this. And then Steve Ferreira over at Ocean Audit is, I think the wild card for the Transpac are two issues. Will Trump invoke further tariffs on China if it's found the Wuhan lab leaked the virus? And the other interesting thing is the potential regime change in North Korea. So did you hear that news?
I did not hear that news.
Yeah. The late breaking last night, Kim Jong-un, there's reports out of North Korea that he had surgery earlier in the week and his life is in grave danger. So
wow.
That's breaking news, and I haven't seen anything today, but I did see that last night.
Wow. Yeah.
But with that, we have our Director of Freight Intelligence here at FreightWaves, Zach Strickland, over here ready in the studio to talk about the freight markets. And should I call Craig down?
Yeah, I think so. Yeah. I think this is the great debate, isn't it, Zach?
Yeah, I can go ahead and set the stage.
Yeah, let's set the stage.
Yeah, I can go ahead and set the stage.
First mover advantage.
Yeah.
Nice.
So just to provide a little context, Craig and I have these ongoing wagers back and forth on, how far we think the freight market is moving in either direction. Starting back in, when the market was really heating up and peaking, Craig and I discussed about how I said I didn't think that the market would fall as rapidly as he did. He thought we would hit this OTVI value of 9,000 by April 15th, by tax day. And I said, no, I don't think so. I think it's going to take a little bit more time to get there. I said certainly by the end of April, but again, what happens last week, we drop below 9,000, we get to about 8,800 on the OTVI, roughly 10% below year-over-year values, quicker than I thought, so I lost that one. And then just recently, we were talking about, this freight market bottoming. Craig, of course, wrote an article that gained a lot of traction on the website about how here in the next few weeks, we're going to see the market turn back up. And again, this was more of a short-term bet. I said, you got to wait for a minute, Craig, because we've got this Easter, this Good Friday effect that's going to drop the market about 4 to 5% further just by that alone that you're going to have to wait for. So I said, give it until, next Tuesday. We'll know then if the market's going to go up or down. And he said, do you think it's going to go up or down? And I said, I think it's going to go down to 8,500. And he said, all right, I'm going to take the high side of that one. And so he's won to that extent because the market, the volumes did drop slightly, but it definitely stayed a lot stickier than I thought it would. It only dropped about 0.38% on the dry van volume side.
Yeah, so Zach, I mean, we're talking about is bottom, not bottom, does it go further? Are we on our way up, right? And it's kind of this argument that people have, and people are arguing, well, it's going to go back up. And I think that both sides really kind of agree. It's just timing, right?
Exactly.
And how it occurs.
Exactly. Neither of our wagers were, in any kind of way disagreeing. It was just the speed and, the exact moment that things were going to happen that was really out of balance there. But again, I'm still hesitant to call it a bottom at this point in time. And he, of course, has his own viewpoint about how, if we get him on here, how he thinks that, his reasoning behind why he's calling this market bottoming and how it's going to turn back up here in the next couple of weeks.
I think we might have Craig on the phone. Craig, can you hear us now? Go ahead, Vincent.
I don't have Craig, so I don't hear him. I'll argue with you because it's my nature. But so are people trying to define a bottom as a specific level, or isn't the bottom more just stair steps up and down along a path, and it may dip a little further and come up? You really can't call the bottom until after a month later, really, right? I mean, you can't really say it's going to go to 83 and that will be the bottom, because it could go 85, 86, 9, and then back to 85 as we're seeing it do right now, right?
Yeah, and I think that's exactly what my point is that we may be looking at some sort of temporary shelf to this. Again, I think Craig would say that here in the next couple of weeks, we're already starting to hear about economies opening again. The state economy is starting to run again. That's only going to have an upward effect on freight volumes, regardless if you think that hair salons and nail salons have a big impact to freight. It's a sign that we're going to
It's the bowling alleys in Georgia.
Yeah, it's a sign that we're going to start moving in another direction. And the fact that freight volumes have dropped much less than they did just 2 weeks ago. So 2 weeks ago, we were looking at 15% week over week drops in volumes. This week, we're down to 2% week over week drops in outbound tender volumes. So you can't argue the fact that the rate of decline has definitely smoothed out a little bit. Have we hit the real bottom, though? It's hard to tell. I don't think that we're going to see, as long as the overall economy remains very subdued, there's always a chance that it goes down. Now, one argument that Craig would have to the other side is the fact that we're now starting to see other markets. One of the things that I look at is a lot of the markets in general. Like, you can't have one market driving the increase and think that that's sustainable.
Yeah.
We're starting to see a lot more markets show week over week increases in volumes. So that to me is actually a pretty decent sign that we may have started to level out here.
Yeah, it's interesting to see that. So we had some
Can you guys hear me?
There he is.
There we go.
I've been listening to Zach give my point of view the entire time.
I've tried.
I would say, Zach, my view is that the industrial part of the economy is going to lead us in the recovery. So if you think about the parts of the freight market that are not coming back, or parts of the economy are not coming back, are the stuff that doesn't really move a lot of freight volume. So, things like sporting events and concerts and movie theaters are not going to come back quickly. But they don't really drive a lot of the freight demand. The parts of the economy that drive freight demand are likely to return much quicker than the broader economy.
Yeah, I don't disagree with that, but the one number that had me completely sketched out in this whole process is those unemployment figures. I know that a lot of those people are in the service industry and they definitely don't, order a bunch of pallets of freight, but they do drive a lot of what people produce in the freight market. So, 20 million people losing their jobs week over week means that eventually that discretionary income is not necessarily going to come back online really quickly. So that's the number that had me the most concerned in this whole process.
And I think that's a really good point. But one of the things to keep in mind is that a lot of the folks that are being laid off are in the lower income areas of employment. And the government has stepped up in offering massive incentives. And in some ways, some economists have argued that if somebody is making less than $60,000 prior to when this took place, they're actually going to be better off with the government stimulus. Now, I haven't studied that deeply to know if that's if the 60,000 number is the correct number, but there's so much government stimulus and support coming into the economy that those service jobs that have been laid off are going to be propped up by government spending. And for that reason, I'm more optimistic that the unemployment numbers are not going to completely destroy the freight activity in our market. Now, the one sector that I probably am more concerned about than unemployment happens to do with the oil sector and the energy sector, because that is an enormous part of our industrial side of our economy.
Yeah, now on this note, we definitely are in 100% agreement. Probably the most concerning figure that people don't really think about in terms of economic growth is that crude oil, man. We have become a lot more dependent on that in our economy as we become one of the world's largest producers of crude oil, and now a lot of those wells are coming offline. What kind of forward-looking impact are you looking for here? Again, a negative 37 settlement on futures on the crude oil WTI price yesterday. Pretty concerning, isn't it?
Well, it is concerning just because it's unprecedented, but keep in mind that the futures contract, that's really a timing mechanism. And so the June number is in the $20, I think it's $15 now. And that's concerning. And certainly U.S. producers are at risk. The bigger issue isn't so much the drilling new wells, because most of the new well activity has actually slowed down and the existing wells are far more efficient. It's the potential of bankruptcies of these massive corporations that are in the oil and the energy area and sector that could bring down entire parts of the economy. So places like Texas and Oklahoma are very, in North Dakota, are very concerning. Parts of Canada, like Alberta, are pretty concerning. So that probably, from an industrial production standpoint, is a little bit more concerning than the consumer numbers, the consumer unemployment numbers. And I don't want to dismiss the pain that those folks are certainly suffering, because I don't think that's not what I'm saying. But the government stimulus that's coming in is going to provide some level of relief for those numbers and allow us to at least absorb some of the shocks. And frankly, a lot of the folks that were laid off in the service sector have been laid off for the last month. And so from a freight standpoint, I don't think we'll see massive deterioration from here on in terms of industrial freight demand, just because we've already seen a lot of the those types of jobs shut down.
Right. So effectively, you don't think that oil shutdown is really going to have a nominal impact, say, here in a month? Say we get all excited that we might have bottomed out, volumes start to increase a little bit, and then all of a sudden we start to see a little bit more fallout from, this oil well shutdown production level. Some of this unemployment money runs out. You don't think that there's going to be the risk of another kind of secondary fall?
I don't think the unemployment number is going to work out. If you think about the Democrats want to prop up, they're really concerned about unemployment numbers and really concerned about the sector of the economy that's impacted. The Republicans in an election year, Donald Trump is not going to, I don't think, is going to prevent unemployment from being unemployment dollars from being distributed. So because of that, I don't think that is a substantial risk to long-term freight demand. I think the parts of the industrial economy is really where a lot of the risk is going to lie. I mean, retail is only 17% of freight demand anyways. And so even if we see a significant reduction in retail spending, it's not going to impact freight demand from the numbers that we're at a significant delta. The stuff more concerning is the industrial sector of the economy. And as you mentioned, oil and energy is probably the most exposed point.
Now, but doesn't all of that, all that business to business, all of that activity from the industrial economy eventually lead to the consumer ultimately?
Well, I think certainly employment and industrial activity does, but the assumption is that our industrial part of our economy is going to come back, and there's even an argument because of the supply chain risk around COVID that industrial manufacturing, industrial production may come back into the United States and parts of North America. I mean, the trade policy issues that happened that mitigated supply chains were significant, but everybody looked at it as an economic issue. There were supply chain risks for sure. What we're talking about now with COVID is a systemic risk to our economy and our national security, which is different than what we saw with trade policy. And so I think we may see some resumption of industrial manufacturing activity or supply chain sourcing in the domestic market at a greater degree than we've ever seen.
Yeah, John Paul Hampstead actually made that same argument last week on the Spot, where we were talking about how the industrial economy may actually recover faster and earlier than the rest of the economy.
Yeah, I think the industrial sector, I agree with JP. I think the industrial sector is what's going to bring it out. Now, it's not going to be a massive surge. I want to be very clear. When we talk about recovery, we're not going to go back to where we were a month ago or 6 weeks ago. We're going to talk about a slow and gradual build. This is, I believe, we're at or near the lows. I don't think we see massive deterioration from here on out of freight volume in the market. I think we're going to see increasing amounts over the next couple of months as their economy starts to restart.
Where do you think that OTVI will be here on May 15th?
Are we going to make a bet? Is this a bet?
This is it.
Okay, I'm going to go on record as saying we're going to end the 9,300. I'm north of 9,300. Anything north of 9,300, I earn.
All right, I'll take the low.
Okay, he's at the low. Let's mark it here. It's on national TV. 9,300 is my mark.
On May
I have been right twice. Zach has been wrong twice. I am batting 2. I'm batting 100% on 2. We'll see if I can get above 9,300. And I hope the freight audience is rooting for this, because resumption of demand is good for freight.
Yeah, I'm pulling for you too. So
what's the timeline that we have here?
May 15th.
I think
May 15th.
Got it right here. Craig's got 9,300 is the over/under. He's got the over.
The over.
I've got
Okay.
the over on May 15th. That is a Friday, by the way, so I'll take it.
Let's talk just a little bit about rates, because we have a few viewer comments here. Tom Oswald, the safety manager at Alameen Brothers. Freight is freight, but running loads for cheap to survive has a disastrous outcome. And there's a couple more comments here, really touching on rates. So we have the May 15th deadline, or not deadline, but the May 15th outcome for OTVI. Where do we see rates going over that same time frame?
Rates, let's talk about spot rates, because I think that's where most of the attention is. Spot rates are not going to have any resumption of upward pressure until after volumes in the contract market come back. So we have to see that OTVI index show upward pressure, probably in the 9,800 range, before we see any level of stability and increases in the spot rate at a level that everyone would consider a fair rate. But we have a long ways to go. The spot rates are going to be, unfortunately, in the dumpster until we see that OTVI index comes up, because contract freight gets first dibs in the market. Contract freight is what's going to bring us out of this. We need to see volumes in the contract market.
Very good. Good insights there, Craig. Thank you very much for your time today.
Thank you.
Craig Fuller, CEO of FreightWaves, and thank you again, Zach, Director of Freight Market Intelligence here at FreightWaves 2. Coming up next, we'll have Anthony Smith, our lead economist, talk about all the great economic data. I have a couple comments here. And yes, Mario Pulowski on Facebook, they are making a bet how the market is going to be March 15th. And what was the number again?
The over-under is 9,300. Craig's got the over.
9,300. So that's that. And then Ralph Stones, he comments on Facebook as well. You know, why don't you guys call truck drivers and ask their views? And we do that.
Absolutely,
specifically
we do.
You on
what the truck. Yeah, we absolutely do on What the Truck. Watch What the Truck, and we
FreightWaves Radio every
FreightWaves
Saturday
Radio.
at 3 to 5 Eastern Time. That's all we do is take calls from drivers. So tune in there, Ralph, and you can call in as much as you want to.
They're welcome to comment today.
Yeah, definitely.
Absolutely.
So, Anthony Smith, how are the economic numbers? I know we have the Philly Fed report along with a couple others.
That's right, Kevin. We have the Philly Fed Index and along with the Empire State Index, and these are something that it gives us a preview for what's actually happening in the economy on the manufacturing front. I like these because they're region by region. You can kind of get a sneak peek of what's happening within each individual major metropolitan area within the U.S., and it gives us some insight into the manufacturing segment within each of those regions of the economy. And it shows data for the April month. And so typically, when we're looking at larger macroeconomic releases like industrial production, manufacturing, things like that, they're a little bit lagged in terms of release because it's these large data sets, and they're giving us data that's for March, but we're already in April. So this gives us a little bit of a sneak peek. And as you mentioned, we have data for the Philly Fed Index for April. Not good numbers. We saw drops into the 50s, negative 50 range. For the Empire State Index, we saw drops into the negative 70% range. And so both really painting bleak outlooks for manufacturing when we're looking at those pinpointed areas, especially when you're breaking out the different components. These are diffusion indexes, and so when we're looking at them, they break out different parts of the manufacturing segment. So we're looking at production, we're looking at orders, we're looking at employment, we're looking at supplier deliveries, and all of these really so far have shown a big decline in new orders, and that's really the telling thing is there's decline in new orders. That means a decline in production, and that also means a decline in shipments, and that means that there's going to be less freight moving throughout the country.
So, now, Anthony, excuse me, just real quickly, just for clarification. So these numbers here, you're talking about the Philly and the Empire State Index, right?
Correct.
And so those are actually measuring the new orders that actually came in March.
No, so what these measure, they're the Fusion Index, so they're essentially surveys that are given out to a range of manufacturing businesses within each region. And the good thing about it is it's not focused in on one particular industry to kind of skew things, but it shows a pretty wide range of all industries to get a really nice measurement of all manufacturing. So this is more of a what do you see, what has come in from your perspective index, as opposed to hard, tangible numbers like we would see out of the industrial production numbers that come out. It's just more of a sentiment, almost like the PMI, Purchasing Managers Index from the ISM. So it still has real-world implications, even so much so where we look at the releases for this, there is a future outlook index, and so what expectations are for the upcoming 6 months. And so when we're looking at that, for both of them, they're a little bit more positive, more positivity on the Philly Fed Index for the upcoming 6 months than the Empire State Index. So we're seeing things moving a little bit more gradually with expectations going into the coming months.
So, Anthony, both of these indexes from the Fed, both the Empire State and the Philly Fed, those are survey-based. Are those data points mostly out of mid-March or later than that?
So when we're looking at these, a lot of them I think are going to be coming from mid-March up into early April. And so that's really going to be a little bit more impactful when we're looking at the latter half of March compared to the beginning or the middle part of March. Especially when we're looking at April, there's going to be a different picture than what we saw at the end of March. So I think it's going to capture a fair amount of both. And as we roll throughout the rest of the month of April, more and more of these indices are going to get released. So we're going to get a little bit more telling what's happening on the other states on the manufacturing standpoint.
Let's talk about house sales and home builder sentiment. We have those reports out now. What are those both telling us about the economy right now?
Right, so housing starts took a pretty big dip, down over 20% from last month, but it's still above year-ago levels. So we were at a pretty significant high. So if we saw a decline, it was going to be expected because we were almost at record highs on a month-to-month basis. Still haven't reached pre-08-09 levels. We were still kind of slowly, gradually climbing to that point, but we were seeing some sustained rise. Builder confidence has dropped pretty substantially, of course, due to the effects from the coronavirus. But when we're looking forward at this, it's going to be a lot of hesitancy, especially when we look at existing home sales. I think there's going to be a little bit more pent-up demand that's going to be diminished, of course, from unemployment. There's going to be less available first-time purchasers. If you have an existing home, maybe you're going to wait to list your home and put it on the market. And so there's going to be even more supply-side restraints because a lot of people practicing social distancing, sheltering in place, they're not going to put their homes up for sale right now. They're going to wait till all this blows over. And so that's really going to take more and more homes off of the inventory in addition to the demand side. So really what we're seeing is shocks on both sides of the spectrum here.
How about small business sentiment in the environment? We know that the PPP is out of money. I think they're working on a deal now to get at least $250 billion more for those loans. Can you give us a little color on small businesses right now?
Right. I think, Kevin, small businesses, not just in the U.S., but really throughout the nation or the world, are going to be struggling. We're looking at different countries, and U.S. is no different. Small businesses are struggling here, and as you mentioned, there is talks of a second round funding specifically targeted for small businesses, and this is going to be really imperative for them because, as you mentioned, funds have run out. I know there's going to be more and more incentives towards making sure that these businesses are retaining and bringing back laid off workers as opposed to having those individuals go on unemployment. So I think that's really going to be the main target for this, is making sure that these individuals can become put on payroll once more or kind of be retained. And so I think that's going to be the biggest, the driver for this upcoming bill that seems to be in its final stages.
Do you see that as one of the biggest drivers for us returning to the economy, returning and reopening and strengthening? Is this small business programs? Do you see that as a very significant indicator or significant driving force?
It's going to be somewhat of a significant driver, I think, once we get up and running again. But it's going to be difficult because, of course, there are going to be a few bad actors. There are going to be a few individuals that potentially are more incentivized to remain out of the workforce because maybe the benefits are better than what they were getting beforehand. So I have to dive back into some of those numbers, but that's one of the things that we're going to be looking at closely. Anecdotally, I know when we're looking around town, potentially going on to Uber drivers, you might have a longer rate for Uber because I think a lot of them can, of course, as they should, practice social distancing and consider their safety first. But as well, you have some Uber drivers that weren't making as much as they would make with some of the unemployment benefits that are now coming in. And so when we're looking at that, not just for the consumer level, but for the small business level, I think those are going to be the psychological effects that's really going to play a role into the economy kind of returning. When we're looking at people being feeling confident in discretionary spending, when we're looking at people feeling confident into entering the workforce once more.
Excellent. Yeah, we've been through this type of cycle a couple times in my lifetime where we've had these type of stimulus type of packages, and then getting the people back into the workforce has been difficult to bring them off of that because they were actually making more being out of work.
That's right. And especially when we're looking at different segments of the economy reopening, that makes this very interesting. I mean, as Craig mentioned, really expecting manufacturing to have some of the most activity moving forward, depending on if there is any kind of stimulus or incentives for manufacturers. We're looking at, of course, any kind of tax breaks, any kind of poking and prodding when we're looking at that latter half of this whole COVID-19 situation. Of course, we're looking at other semi-essential businesses, but still things that have been kind of pent up. We're looking at dentist visits or certain doctor's visits that can be put off for a couple of months. Maybe some of those are going to come back online a little bit sooner. Still, it's going to be a little bit hard to say how each individual state's going to react. We're looking at the reopening of the economy on a state-by-state, region-by-region, city-by-city basis. It's all going to be different. You know, if you're living in Manhattan, it's going to be a lot different than Omaha, Nebraska. So that's really going to be an interesting thing to watch, to see how each state kind of mitigates that reopening effect, especially when we're looking at Tennessee, South Carolina, and Georgia right now leading that charge.
Thank you very much, Anthony. Though we do have one final quick question for you from Dooner, actually, at his remote studio. Can you ask Anthony if my stimulus check status will ever change from payment status unavailable?
I took that up with the IRS. I don't. A little bit out of my wheelhouse, but
I can tell by your stuttering you have no answer.
Best of luck, Dooner.
Exactly.
Best of luck.
Thank you very much again, Anthony.
Thanks, Anthony.
Head economist here at FreightWaves.
Yeah, always insightful.
Always. So I know we talked about SONAR and freight levels, and
we did,
and that, but
yeah,
what is it telling you? And I actually have a question here.
Yeah, go for it.
Well, first of all, Les Willis says OVI will be under 9,000 by 5/15. No way we hit those numbers above 9K. It'll be just 14 days after the economy reopens. Agree on spot rates. So I guess he's taking Zach's side.
He's taking Zach. So we got one vote for Zach. Let me mark that down. Zach's got a supporter.
On that.
I don't think Zach will like having that support.
And then
nobody wants it to stay low, obviously.
Exactly right. Tom Oswald, though, says, hope you're right, Craig.
Yeah, right. I think we all hope.
I know, we all hope.
Right. We're all hoping that he's right. We're all hoping that we're at the bottom.
Yes.
And,
I do have a question here.
Yeah, go.
Actually, Gilbert Hercules. Brokers keep too much of the load, and they need to be regulated. What are your thoughts on regulation of brokers?
I'm always against regulation.
Yeah.
Free market. No, I'm against.
I think the perception is that brokers take this huge amount of the margin or the price of the load, and that's not always the case.
It's not always the case. I get the feeling, especially now.
If you look at it like your outsourced sales, and then what you're going to pay a commission to a salesperson to go get loads, it's pretty reasonable.
Yeah, I mean, I'm all for everybody making a fair wage and getting paid for what they're doing, and everybody making their margin. But I'm against regulation. Just one. In most instances, I think in some places it definitely makes sense. Like we were talking about the FMCSA. I don't understand the lax and safety regulation, how that saves anybody money or eases any constraints. But when it comes to this sort of stuff, I'm against the regulation, and I think people need to work fairly.
Yeah.
Is my thought.
It's coming from two former freight brokers, too, so...
Well, yeah, for a short period I was.
No,
yeah, absolutely. But I was on the asset side as well. And I mean, I see both sides. And I see there's value in both sides. And I get it. There are those that just drive down those rates. And so I get the sentiment on both sides.
So what is SONAR telling you these days?
Yeah, so a lot of, when we hear Zach and Craig making their arguments, and I think it was quite obvious that they pretty much agree. And Zach is, I think, a little bit more pessimistic in his view, hoping that Craig is right. But but you saw he took the under because Craig already took the over, and right. So his nature is just to take the other side, like myself. But what SONAR is telling us right now is that there has been. The downturn in volumes has definitely weakened, and it's a little bit more flat, and it actually has rose a couple days, but it has dropped again. So what is it? Was it a stair step, and it's going to drop more, or is it just bouncing along this kind of
there's a lot of unknowns out there.
There's a lot of unknowns. I kind of look at it, and that's what I was trying to ask Zach before Craig came on. We were discussing that is define the bottom. Why we're trying to define it as a specific number, and it really isn't. It's this range. I think we're in that range. And when you look at OTRI or the tender rejections, the rejections of loads in the contract market, they're at 3.5%. It's much like unemployment. Where is actual zero, right? Zero isn't zero, right? And it certainly can't go negative. They can't accept more loads than they're being offered. And there's always going to be some sort of rejection because of imbalances, et cetera. So where is true zero on rejections, right? Is it 3%? Is it 3.5%? Is it 2.5%? I don't think we've ever really seen it. Hopefully we won't really see it and get there. But I think we're close to what would be actual zero. It can't go any further, right?
I think you're right. I think it'd be hard to get really with any magnitude below where we're at right now.
Even in the volume side. And I'm using OTRI as an example because it's easy to use that. But the volume side as well, I would think that it's going to be very difficult to go below 8,000.
I think you're right. I think.
I mean, there's stuff that is moving now. Industry is shut down. So what else can possibly be shut down? If we stay locked, in place or sheltered at home and social distancing, and the economy does not come back on, we don't start reopening for the next 2-3 months, right? That type of thing. Then it blows. It gets down to 7,000 or something like that. Now we've got a really, really, really big economic issue on our hand, and now those people calling for it's possible that we were grown into a depression for the next 2-3 years. That becomes realistic.
It does. Hopefully, it doesn't happen, but it becomes realistic.
Right, but quickly.
And now we have
you've got long haul volumes that have been actually ticking up for 2 days or 3 days.
That's good.
So long haul has short and local haul has been declining, but showing some resistance. And you actually have Atlanta, Ontario, LAX or Los Angeles, and Harrisburg, large markets, all showing pretty good increases in volume in both refrigerated and van volumes, right?
Very good. Now we have Emily Szink.
Oh, we do.
She's set up over here in the studio.
Look at her.
Yes.
Actually, I do, going back to SONAR, this is SONAR related. We do have one really good viewer question I want to get to before I start talking about FreightWaves Live at Home. David Rossi says, what are the number 1 and 2 things a trucking company could do to stay competitive post-COVID-19's peak? Number 1 answer, probably SONAR, Vincent, right? So what would be number 2?
Just for an owner-operator?
Any trucking company. What are some things, number 1 and number 2, they could do to stay competitive post-COVID?
My number 1 and number 2 are both knowledge of the industry and the transparency thereof, and real-time data. Those are. It's 1 and 2 right together. Right, they've got to have fair pricing and good service, obviously, and safety and so on, and drivers, et cetera. But staying on top of the market on a daily basis and being able to look forward as to what is happening next week is incredibly important, and we're seeing that importance right now.
Good answer there. Well, thank you. That kind of diverted me from, but you guys were talking about SONAR and wanted to get that in because I thought that was a nice little tie-in there. But I am here to talk about FreightWaves Live at Home. You've probably seen the commercials on FreightWaves TV either before this program or before any of your favorite shows on FreightWaves TV. It's going to take place May 5th through 7th. It is an all virtual event. You don't have to leave your office. You don't have to leave your couch. You could watch everything right here on FreightWaves TV. And I know a lot of people were disappointed because they love our FreightWaves Live events, but all of our same keynote speakers, all of our same fireside chats, and even the 7-minute rapid fire demos, all happening on our virtual event.
It's awesome.
Very good.
I can't wait to see it.
What is some of the lineup of speakers that we have?
So like I said, basically everyone who was scheduled to be at Atlanta will be here. So Shelley Simpson from JB Hunt, she is still doing a keynote. I'm looking forward to that. We have Doug Wagner and Craig Fuller doing a talk, Doug Wagner from Echo. We also have added someone, though, kind of with the climate of everything. Ron Klain, he was called the Ebola czar under President Obama. So that was probably around 2014, 2015, he held that title. He's actually going to be opening the show on May 5th, and you could ask him questions. So after he does his talk, there will be a live Q&A. I'll be conducting a Q&A with him. So that's Rob Klain on day one. I'm really looking forward to that. We have Craig is doing a lot of great interviews. He did one with Peter Rentschler yesterday. And like I said, the entire agenda from FreightWaves Live is still happening on FreightWaves Live at Home.
Awesome.
Yeah.
It sounds like it is going to be a great event. Definitely. And we have a few other keynotes like Paris Cole at Truck Stop. And I think you mentioned Shelley Simpson and all of those great guests. What can people expect from at home that's just different than a normal conference that we all know about, that we all attend? What are some of the special bonuses that we have?
Well, I know the big thing, people love networking. They love coming to our events because they say it's next level networking. You don't get to rub elbows with industry experts like you do at our events. You're still going to get to do that networking. It will just be via Slack. So if you haven't used Slack before, it's basically like AOL Instant Messenger. A lot of companies use it to communicate within their company, but now we're going to open this up for everyone. So if you are interested, say you see a demo on TV and you're interested in learning more about that company or more about that demo, just go to our Slack we'll have for at home. So you're still getting networking. You won't have a problem with that. We have the live viewer interaction right now on this show that is still going to happen during FreightWaves Live at Home. We love the interaction. It's almost like we have a community within each one of our shows. So you still could ask Dooner questions. You could ask Vincent, Kevin, anyone questions live when we're doing our content. So you're not missing anything. The added bonus is we have a TV platform. So there's no reason for us to cancel the event. And I think it's going to be even better because you could watch on your own. If you say you don't have time or you have a phone call or you have to be on a Zoom conference call and you can't watch something, everything's on demand. So if you miss a keynote you want to see, you go back and watch it on demand on the FreightWaves TV app.
That's awesome. And the agenda is already out on freightwaves.com, is that right?
Yes, the agenda is there, and every day we're actually adding more people. I'm excited about, we just added a group of great ladies, very powerful ladies. It's called CEOX. It's a company that is looking to add more female CEOs to not just our industry, but the workforce in general. So they're going to be talking about that. We have the founder, we have someone else who is a part of CEOX, and then we also have Tracy Black. She is on the board of directors for Emerge. So that's a talk we just added that me as a female, I'm really looking forward to.
Excellent. Good stuff.
Thank you very much, Emily.
No, thank you guys.
Looking forward to May 5th, 6th, and 7th at home right here on FreightWaves TV. So that's great.
Yeah, no, it's going to be awesome, and it will be badass, by the way.
It will. It definitely will.
Yeah. So you want to talk about something good real quick?
Yeah. Or good piece of news for the day.
I've got a good piece of news for the race. So Son of a Trucker opens free 400 space lot along I-44 in Missouri. Clarissa Hawes reports as truck drivers continue to haul essential goods across the country amid the coronavirus pandemic. Missouri businessman Bob Merkel says he wants to do his part by offering free trucking at his 15-acre, 400-space lot. And we have it up there. All right, good. Merkel opened Bob's parking on Interstate 44 at Exit 88 in Strafford, Missouri 2 months ago. He said his lot is fenced, well-lit, and has high-definition security cameras. The only drawback...
What's the only drawback?
Yeah, there's only one porta potty right now.
Oh.
But they're working on that. Rain delays have pushed back the date to pour the foundation for the permanent restroom facilities, which are going to be added here soon. And there's no food on site, but it's easily accessible a couple miles away, is what he says. So there's your good news.
That is excellent news, except for the porta potty.
Yeah,
of course,
but they're coming.
Definitely. So Travis Hamden at Condesa Freight. I couldn't agree with you more, Kevin. Brokers are an extension of your sales team. The issue is that operational costs don't compare, and I think that's why the regulation discussion has increased. And a question for you, actually, from Chris Jolly, the freight aficionado, is do you think long-haul increases are due to people needing their supplies faster than what intermodal could provide?
I think that's part of it. I think that's definitely part of it. And what I was getting to before I was so rudely interrupted by Emily Szink was, just kidding, was that last week we were talking about imports and imports coming in, and they always lag, right? They come into the ports. We saw them uptick really since the beginning of March coming up, and they've hit the ports, and now they're starting to come out. And that's where you're seeing this from is your Harrisburg area, your EWR area, LAX, Ontario, et cetera, these long hauls. So yes, Chris Jolly, I think that's part of it for sure. And it is it is also, it's made it through those that cross dock and transfer are starting to make it through there and moving.
I agree. Yes,
you do.
Yeah, I do. We finally agree on something. Right. Yeah.
It's rare.
So on FreightWaves TV this week, coming up at 2 p.m. Eastern Time, about an hour after we wrap up here, is Great Quarter Guys, and that's myself and Andrew Cox, and we're going to talk about earnings. Earnings season is up and getting in full swing, and we're going to go through some of the early preliminary earnings, J.B. Hunt being one of those, PM Transport, and a couple of the others that hit this morning, and we will talk about that, and that's where finance and freight come together. So we'll be doing that, and then tomorrow
you got to go back and watch What the Truck.
I will.
I mean, the people need to don't miss yesterday.
Oh yeah, don't miss yesterday. There's a phenomenal interview that you and Dooner did.
Oh yeah,
with the gentleman from BNSF.
Yeah, who has survived Corona. It's pretty eye opening. That guy's got a heck of a story. You got to listen to him. He really survived
it too, right? I mean, he went on
13 days in induced coma, etc. Yeah.
Yeah. So that was Monday on What the Truck Said. Yes, go back and watch What the Truck. Tomorrow at noon, Wednesday at noon Eastern Time, is Put That Coffee Down. That's Freight Sales Podcast with myself and Tim Dooner, and we're going to talk about avoiding that pricing trap. Volumes are coming down, the economy has shut down partially, and rates and pricing are going down. So basically, how do you defend your pricing? How do you defend your value? That's what we'll be talking about tomorrow. We have a survey up. You can go to LinkedIn and see either Junior's post, or I'll have a post up very soon with a survey. We do a weekly survey, so you can see what your other competitors and peers are doing to defend their value as well. So that's right. Wednesday. And then at 4 o'clock on Wednesday, I believe, is with SONAR.
Yeah, with SONAR.
Luke.
With Luke Falaska and Fun Shirt Friday, Kyle
Taylor. Both SONAR executives here, SONAR sales executives, and they'll be talking about SONAR Wednesday. And then Thursday at noon, same time as today, we'll be doing our latest coronavirus freight market update, where we'll talk about the freight markets and the impact of coronavirus and the pandemic on that. So we'll see what freight volume levels are at that time. See who might be winning the bet. At a very early stage in it, right?
Yeah, and then following that up at 4 o'clock on freight forecasting, 4 o'clock Eastern
on Thursday.
Yeah, I'll be breaking down this bottom.
Very good.
And what that means in different markets.
And you'll probably be pulling in some ocean freight in there.
I try and look at all of the different stuff: the
and
imports, the air cargo, the rail.
I'm
bring it all
interested to see
together.
what the blank sailings or the voided sailings, what impact that is going to have on the freight markets, because those are all about we're supposed to have hit coming up in the next couple weeks.
Yeah, I mean, they're all
Friday we have What the Truck again with you and Dooner.
Yeah,
and you'll have some great guests on, and it's always a fun show.
Yeah,
but that kind of wraps it up for this edition of the Coronavirus Freight Market Update.
Yeah,
have a safe and prosperous week.